Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Today we're going to be taking a look at another small cap company in the MJ space, based here in Canada, but this one's actually involved in the production and licensing agreements to do with edibles, and all the derivatives based around MJ 2.0 and 3.0. This one's really exciting. It came to me from one of my subscribers. So please feel free to leave a comment in the section below if you have any other stocks in this industry you'd like me to look into. Before we get into the video, please take a second to like and subscribe to the channel. And without further ado, let's jump in and talk about Indiva.
Okay guys, that's right. Today we're going to be talking about Indiva Limited. This is a very small cap, about a $75 million market cap Canadian MJ producer that's involved in the manufacturing and production of edibles here in Canada. Now the ticker symbol on this one is NDVA. It trades on the Canadian Venture Exchange, and it's not to be confused with NVIDIA. When I first started looking at this company, I kind of had deja vu between the ticker symbols, but this one is Indiva Limited. I also wanted to give a shout out. This one did come from one of my subscribers in the comment sections, and it's a really cool company that wasn't on my radar before. I think this one offers a lot of upside potential. We're going to go through exactly what they do, their investor presentation, how their licensing and production operations really work, and then we're going to look at some recent news articles that have me really excited about this company moving forward as Cannabis 2.0 and 3.0 continue to roll out here in Canada, and perhaps more excitingly down in the United States as well. So before we jump over to Indiva's website, I did want to look at the ticker symbol here. You can see as of Friday, I'm recording this over the weekend, so Friday close, it came in at 55 cents. It was up just under 2%. We talked about their market cap being 74 million Canadian, so definitely smaller compared to some of the other MJ stocks that we've looked at over the last couple of months. If you pull out to a 1 year here, you can see last March they were trading in the 20-cent range. They had a run up here over the last couple of months as well, reaching a high of about 64 cents, and they've now pulled back to that 54, 55 kind of cent range, which I think offers a pretty attractive entry point if you're looking to get some exposure in this space. So I'll now jump over to the Indiva website and we can talk about exactly what it is that they do. So they're branded as Canada's #1 producer of edibles through quality, innovation, and partnerships. Now we're going to explore some of these licensing agreements and partnerships later in the video, but this really is unique to this business model, and we'll talk about how this really helps their bottom line and their overall operations as we move through the slide deck here. So about Indiva, Indiva sets the standard for quality and innovation in MJ. As a Canadian licensed producer, Indiva creates premium MJ edibles, capsules, whole flower, and pre-rolls, provides production and manufacturing services to peer entities, so business-to-business transactions. In Canada, Indiva produces and distributes the award-winning Bang chocolate, Wana sour gummies, Artisan Batch, Ruby, MJ sugar, and Sapphire MJ salt, which is coming in 2021. They've also got other products that are licensed through different agreements and partnerships. The two that we're really going to talk about in this video is the Bang licensing agreement and the Wana sour gummies, as these represent the majority of their sales right now and are really their flagship product offerings or brands. And if you scroll down on this page, you can see that Wana, Bang, and Deep Cell are actually called out as their exclusive licensed partners here in Canada. So if we now jump over to their product offering, you can see here the Wana sour gummies are featured on their homepage. There's a number of other products they also show here, so the Bang, which is focused on chocolates, and then they've also got obviously the dried flower itself, small batches, big reputation, so they're really going for that artisan or craft kind of quality that we've seen a lot of companies looking at. Here's an example of their Ruby MJ sugar, so this could be mixed into a variety of different drinks, coffees, cooking, that type of thing. And what's got me really excited about this company is they have so many different products in so many different areas of the MJ market itself. And before we get into the actual investor presentation, I wanted to take a step back and look at their actual base of operations, which is centered in London, Ontario. Now, there isn't a lot of information about their actual facility or operations in the investor presentation, so I wanted to start here. And essentially what they've done, this is from March of 2019, so it's about a year old now, but they actually have a full end-to-end extraction facility in London, Ontario that has the annual capacity of 70 tons ounces or over 4 million grams of MJ. So huge volume here. And what this allows them to do is actually extract from the dried flower itself at this fully funded facility. And then on site, they can start to make all these derivative products. So essentially it's an end-to-end system. And you can see here, Indiva plans to perform extraction on site in order to complement third-party extraction services. So some of their products are still going to come from other vendors, but it allows them to bring a lot of this stuff in-house. You can also see here that they've put in over $1.4 million US to their extraction equipment, and this is already fully funded. So this is going to allow ample capacity to produce a wide spectrum of derivatives, edible products from Bang, Deep Cell, and Wana product lines, as well as Indiva branded products, subject to applicable regulatory approval. Now, they do also mention the possibility of producing distillate for licensed third-party partnerships or joint ventures. We're going to talk about one of these joint ventures towards the end of the video, but the point here is that they've got a large-scale production facility that really opens a lot of doors and allows this company to really ramp up production at the pace they deem fit and take control of their operations in-house. So if we now jump into the investor deck itself, this is from Q1 of 2021, so very recent. You can see here this licensed production facility in action. So they're making gel capsules, obviously their Wana edible gummies, the Bang chocolates, pre-rolls, and then the flour itself. So you can see a lot of activity in this facility, and it really is an extremely high quality professional building that they've put up and established here. Now this next slide talks about their retail footprint or distribution network. So you can see here, based on the different provinces and territories, there's over 1,400 total stores in Canada, with the Indiva store penetration sitting over 80%. So they've got a ton of retail touch points here where they can market their products to customers. We're going to talk about some of the recent recognition this company's received in terms of market share, but the point of this slide is that they've got a lot of different distribution points. You can also see Ontario alone is opening up to 30 stores a week and expects to have 1,000 stores online by the summer of 2021. So they're currently sitting at 354 stores. So the marketplace here in Canada is growing exponentially. At the start of legalization, it was kind of a rocky situation, especially in Ontario with their lottery system, for a lot of these retailers to open up. But a lot of those barriers or limitations have now been lifted, and people are really starting to maximize and capitalize on this by opening more and more retail stores across Canada. Now this next slide here really talks about the distribution in terms of product offerings. So they compare California and Colorado, which are considered more mature markets. They've had legalized MJ products there for years and years now. And you can see edibles represent 15% in Colorado and over 17% of sales in California. So when you compare that to Canada, edibles only represent about 5% of the category share here today. So Indiva really sees big growth in this product category moving forward. And within that edibles category, gummies and chocolates make up about 90% of sales. So those are really the two flagship brands that Indiva has launched with Wana and Bang. And that's really where they feel like the majority of this sector is going to focus as the market becomes more mature. So this slide kind of combines the last 2 points we've talked about in terms of retail distribution and product offerings in each of the product categories. So you can see across the top here, there's all the different national or provincial dealers or retail channels. So you can see here the Nova Scotia Liquor Commission, the Alberta Gaming and Liquor Commission, the Ontario Cannabis Store. So these are all of the different provincial suppliers. And then on the left here is the different product categories. So you can see in each of the different provinces, so Ontario, Quebec, Alberta, so on and so forth, what's offered by Indiva in these different retail locations. So you can see whether it's pre-rolls, flour, capsules, chocolate, or the gummies, they really do have a lot of different offerings in a lot of different provinces from coast to coast. And then in terms of the rollout roadmap, a lot of new products coming online here in Q1 and Q2 of 2021 across the different product categories and across the country in terms of geography. Now they do service the medical market as well in terms of chocolates, gummies, and these fast onset gummies. Now this doesn't represent a lot of their revenue, but it's cool to see that they also have their fingers in that medical pie as well. Now the last thing I wanted to point out on the investor deck, and then we'll jump back to some of the news articles, is just the product offering. So this is a really well put together slide that kind of shows their branding, their different products, and kind of the look to the end user. So here you have the actual flour, which includes pre-rolls, dry flour, and capsules. This is under the Indiva brand itself. You then have the artisan batch. So this is focused on pre-rolls and dry flour. So this is kind of their more high-end brand. The Wana gummies. So you can see these come in a variety of colors and flavors. They initially launched 3 flavors in Q3 of 2020. They then launched 4 more in Q4 of 2020 to bring that total product up to 7 different flavors. And they now have these fast onset Wana Quick gummies, which came into production Q1 of 2021. As you scroll down, you can see the Bang chocolate here. So it's THC, milk chocolate, dark chocolate, and then they also have a CBD option here. They also have caramel chocolate, peppermint, iced milk, and then more flavors coming online in Q2 of 2021 as well. And finally is the MJ infused salt and sugar. So again, this stuff can be used in a variety of different baking and cooking, and really opens the door to merging kind of the culinary world with the MJ world for people who want to start experimenting with this product. So if we jump now back out of the investor presentation, I wanted to take a deeper look into some of these joint ventureships and partnership / licensing agreements that this company has, because it is a very unique business model. So they do have their own Indiva branded products, which we saw, but the main 2 that this company sells, being the Bang chocolates and the Wana gummies, are actually through licensing agreements. So on the Bang side, Indiva actually has acquired 5% interest of the Bang Corporation, and they've created a 50-50 joint venture, which allows Indiva to sell and license a lot of the products that Bang produces and has the rights to. So you can see Bang, an intellectual property company, which has the licensed rights to a full range of MJ and CBD products, including chocolates, gums, oral sprays, isolates, vapes, and vape cartridges. And through this joint venture, Indiva becomes the exclusive, so the key word here is exclusive, they're the only ones who are able to sell this stuff in Canada, licensed manufacturer and distributor of a full array of these Bang products. Now keep in mind, this article was from 2018, so this is not a new development, but it shows how this company is set up and some of the interest that these big international licensing and branding companies have in Indiva's success. Now the other one I wanted to talk about was this recent license extension. So this is from February 18th of 2021 with Wana brand. So this is the company behind the Wana soft chews, and you can see here Indiva will continue to have exclusive rights. So again, the only one who can sell this stuff in Canada to the gummies and soft chews for the next 5 years. So this was a 5-year extension, and this really allows the company to have that stability and that confidence that they can start to plan out the next few years of operation, knowing that they'll be the only one who's able to provide this product to the Canadian market. And if you scroll through here, you can see that Wana sour gummies continue to be the most popular edible brand in Canada, and they actually hold 3 of the top SKUs in the country and account for over 30% of edible category sales. So this brand is extremely well known, and having the exclusive rights to this product offering is very valuable to Indiva, especially as this product category continues to expand month over month, which we'll see here towards the end of the video. Now the third article I wanted to talk about here isn't necessarily a licensing agreement, but it's actually a strategic investment from an Alberta base, so this is a Calgary based MJ company, producer called Sundial. So what happened here is Sundial actually invested $11 million into Indiva in cash, and then they also provided an $11 million secured term loan facility. So they were granted shares at 44 cents per share, and this actually gave Sundial about an 18.5% interest in Indiva. So this is really interesting to me. Number one, it hits close to home here. I'm based in Calgary, and that's actually where Sundial cultivates or grows their MJ. But it also means that Indiva has has a secured source of dry flower input for their production, and it spreads out the risk in this category. So I thought this was really interesting. Now, they used this $11 million to pay down some other debt and obviously to invest in the growth of their business. And the nice thing about the loan is they do have access to additional capital if they wish. Now, it does bear a 9% interest rate, but it does give them that flexibility and that confidence if they do need to draw from the loan moving forward. So now that we've kind of talked about what Indiva does, how the business is set up, the licensing agreements with some of their top branded products, and this strategic investment from Sundial, I wanted to get into the actual numbers that Indiva's been putting forward over the last couple of quarters. So here's an article from January 13th, 2021, so fairly recently, talking about Q4 guidance. And you can see here that the company is expected to report anywhere from 6.9 to 7.2 million in revenue for Q4 alone. So when you think back to their market cap, they're doing about 10% of their market cap in terms of revenue each quarter right now. And if you were to extrapolate this out, even at this current rate, that would put them in the range of about $28 million to $30 million a year. So they're basically trading at about 2 to 2.5 times revenue based on today's share price. Now, in terms of growth, this was a 2,000% year-over-year growth from Q4 of 2019 and 130% sequential from Q3 of 2020. So when you start thinking about 3 and 4 digit percentage revenue growth, you really start to understand the potential of this company and how quickly this product category is really growing and expanding here in Canada. Now, they also talk about the unit sales of their two top product offerings, so the Wana Sour Gummies and then also the Bang Chocolate. Now, the sour gummies shipped over 1.2 million units versus about 330,000 in Q3. Now, keep in mind, Wana only came on the market in the last month of Q3, so that number would probably be closer to about 900,000 if it was available for all 3 months, but still tremendous growth in that category. And then in terms of the chocolates, they actually just signed an agreement with Shoppers Drug Mart. So this is one of Canada's top drugstore chains, which is actually owned by Superstore. And they've agreed to now carry both the Bang Chocolate and Wana Sour Gummies through their online MJ platform. So this is phenomenal in terms of national distribution capabilities. And continuing on that distribution theme, this is actually the most recent article that I was reading in terms of Indiva. And this one came out March 11th of 2021, so just a couple of days ago. And this talks about their record market share in February of 2021. In the markets they serve, so British Columbia, Alberta, and Ontario, they expanded their market share to 45% of sales in February and 44% in January. Not only are they now the number one market share position in terms of edibles, but they're responsible for nearly half of all edible sales in these major provincial territories. Outside of the big three, you can see in Manitoba, they also came in number one with 49% market share, up 3% over January. Yukon, number one with nearly 60% market share. And Saskatchewan was actually the lagger, which represented about 20% of overall sales. So I think this is phenomenal for this company. Not only are they growing expansion and their distribution network, but there's obviously an appetite for these products, and people are choosing these brands over anything else in the store nearly half of the time that they walk in that door. So scrolling down here, you can see that in terms of overall sales, so this is not unique to Indiva, but just the product category itself, edible sales accounted for $8.7 million in February of 2021 versus only $3.1 million in February of 2020. And January 2021 also came in above that $8 million mark. So this really speaks to that shifting customer behavior as people start to transition away from the dried flower itself and towards the edible, like we saw in Colorado and California in the States. So to wrap things up today, you guys, I wanted to give you kind of my thesis on this company. Now, I know we didn't talk a lot about the actual input and production itself because this company's business model is really focused on the end product and the retail experience through its licensing and production agreements. So this one's a lot different than maybe a WeedMD or Valence or some of the other companies that we've looked at over the last couple of weeks. weeks, but I think this one is in a really unique position because of these long-term licensing agreements and the popularity and recognition that these brands command. I think this company has very stable revenue moving forward. I definitely think the edible product category is going to be the front runner moving forward here as people start to experiment and try different things out. And I think Indiva is in a really great position to capitalize on that. So if we look at their market cap here of $74 million and some of their growth rates over the last couple of quarters, you pair this in with the category growth overall in terms of the edible market, and I feel like this company can maintain those very high growth rates for the foreseeable future. So if we use Q4 and kind of extrapolate that out on an annual basis, with zero growth, they'd be looking at about $30 million in revenue a year. If they're able to grow that at about 50% a year, that would put them at about $45 million next year, and then upwards of about $70 million the following year. So it doesn't take long to see the revenue growth profile of this company. And when you consider a lot of the other players in this space are trading at about $250 million, I can definitely see this company becoming a $2 to $3 stock in the next couple of years here. And for that reason, I'm definitely going to be looking at this one in more detail. I think anywhere in this kind of 50-cent range would be a good entry point. It looks like it has some support around the 49-cent range. So I definitely think this one is worth adding to my MJ portfolio and can offer some strong upside potential in the coming months and years as the market continues to expand, and particularly if the US legalization goes through, which will further drive this company's results. Now, if you haven't already, please take a second to like this video and subscribe to the channel. Let me know in the comments section below if there's any other companies in this space you'd like me to take a closer look at. As mentioned, Indiva was one that came from one of my subscribers, so I'm really excited to be learning about new companies with you guys. And on a final point, please make sure you have a great rest of your day.